All right, welcome back everyone to another edition of Market Analysis on the Financial Summit YouTube channel. Sorry we couldn't bring you guys a video this morning with Matt McGregor and myself. Both were a little bit busy this morning, but we got Mark Wood for you today. We'll be back tomorrow morning with Matt McGregor. And Mark, how are you doing today?
Doing great, hanging out, doing much of nothing so far.
Excellent. But you had a good time for the 4th of July?
Yes, I actually had a really good time. It was I'm usually out there performing and playing, and it was kind of nice to just sit back and chill and relax. We were out at a lake outside of Gainesville, Florida, for the 4th, hanging with some longtime friends.
All right, very cool. I see a lot of regulars in the channel. Welcome, Feral Analysis, and welcome, Surviving Palawan. Welcome back as well. You guys are usually on with us all the time. All right, well, since there was no show this morning between Matt McGregor and myself, let me open screen share. I will take 5 minutes, and I will go through my charts, and then the floor will be Mark's for the rest of the hour. This show has been going an hour and a half. We will do our best to keep it to 1 hour, but I can't promise anything. Okay, here is the weekly chart. I'm liking this week's candle. However, this candle does not change anything. In order for this weekly candle to change anything, it would have to rally, not just to close the entire last week's candle. It would have to rally all the way above the moving average. We're talking going over $65,000, maybe even over $66,000. Now, of course, if the candle comes all the way up and closes above 62, we're going to perceive the market differently going into next week. But in order to actually alter the current short-term or intermediate-term bearish trend, this candle would have to rally all the way to 66,000. I don't see it happening this week. Anything can happen, of course, but the weekly chart is pretty much written in stone here for at least a week or two. What about my allocation? The allocation chart is also pretty set at being written in stone. In order to change the allocation, Bitcoin would have to rally all the way close to $64,000 on current candle. On next candle, things could be different. But on current candle, for the next day and a half, it would have to rally so far that I doubt anything is going to change. What about the daily chart? The daily chart has the ability to alter things. However, there is absolutely nothing that the daily candle can do today in the next 7 hours in order to alter the bearish view. It would have to at least rally all the way above $61,000. That is unlikely. However, tomorrow's candle, if that candle closes above today's high, which is pretty much the high of the last 4 days, if we can close there tomorrow, we will get a green star candle. A green star candle is like our first tiny step towards reversing the market. However, it will run into a massive wall of resistance of just a 20-period moving average, but that's enough for me to take it seriously. Also, it's going to run into multiple prior levels of support, other than that one time it broke below for 2 days, but it rebounded off the MRI buy, so it makes, and a moving average, so it makes sense to me why it broke it. This is a double resistance point. I think this is a serious resistance point. I think Bitcoin will struggle massively breaking 61,000. And in case it does, the 64,000 is going to be even harder to break than after. So nothing is looking good for Bitcoin. Perhaps Mark can give us some better news. I will take a look at the cycle. We are currently sitting lower than all of the last 3 bullish cycles since the halving. The only one we're competing with right now is the very original, cycle. And back then, Bitcoin was like 10 cents. So I'm not sure how relevant we can take it. But if Bitcoin stays below 60,000 at the end of July, this would be the lowest or the worst start to a bull market Bitcoin has ever seen. Traditional markets, oil markets are holding pretty well. I'm very surprised considering it's the summer. People are starting to use more gas. Maybe enough people are buying Teslas that it's not as much of an effect. And the Biden administration continues to add oil to the Strategic Petroleum Reserve, much to my surprise. Gold had a really bad day yesterday. It still does not change the very bullish picture that we have on gold. What about the S&P? The S&P weekly chart after a day and a half is starting to go up. This is the week I would never go long on the S&P or the NASDAQ. Here is that's the 10-minute chart. We don't want that. Here's the daily chart. Wow. We are rallying like crazy today. I am now eyeing the daily MRI top early next week as the top of the market instead of being last week. I still would not chase the market here. And real quick, I want to glance at Tesla. Here's MSTR. It of course going to follow Bitcoin. I want to look at Tesla because I think Tesla is topping here. This is the weekly chart of Tesla. We are on the 6th candle of the MRI. The daily chart today, I believe, is the MRI top. No, yesterday was the MRI top. Again, today is the day I do not go long. And I do think Tesla has been rallying too much. And you wait for weakness. You wait for one red day and then probably a decent pullback. But congrats to all of those that have been holding the Tesla stock. All right, Mark, that is it for me. That's all I wanted to look at. Maybe a peek at Nvidia. Not much comments on Nvidia, maybe tomorrow. All right, this is your show. I did my charts. Let's see what you got. I'm going to come off screen share now. Any comments on what I said, or just go straight to your charts?
No, just briefly, I kind of agree with you on almost all of that. I'm definitely seeing 5960K as a tough area of resistance for Bitcoin to really even consider any kind of reversal. And it's kind of in a bounce mode right now, but nothing important happening until at least above there. But oh, you disabled the screen share.
Hold on. Let me solve that problem. There you go. You're good.
So let's start really quick with Nvidia. It's something interesting, and I'll kind of show an equivalent just to how insane Nvidia has been. So I actually had to add a fib extension. So this Fibonacci is taken from the 2021 high down to the 2022 low. And you can see right here, if I zoom in a little bit, that I've changed my 4.618 to the 5.618 because Nvidia just blasted right through it. And we can see here, we are on a monthly MRI warning right here. And we had
we had the warning, yeah.
Yeah, we had the warning. And this candle we talked about as the month was closing, it's pretty toppy. I think it's going to be very difficult for the price to push above a new all-time high without consolidating sideways or having a correction. However, you know, one of the things I was noticing as the month was coming to a close is, if I hide my drawings for a second, you know, I do respect the MRI, but anytime a candle closes green above the top band, especially on monthly, the call is to look for higher highs until proven otherwise. So I'm not convinced. We might get a top in the next one or two candles, which, if we kind of go back to some of our pre-election analysis, I've mentioned that mid-August to September's are a pretty good time to find tops in the indexes, not in individual stocks, but in the indexes. And so I'm not anticipating this to be massively strong above this wick, but I wanted to show So let me go back to the fib. I just wanted to show where Bitcoin would have to be in order to match this move that we've seen in Nvidia. So I believe I have it on here. Yeah, I do. So in order for Bitcoin to trend to this 5.618, we would be looking at a price of $315,000, which is
Nice.
absolutely insane. It just kind of shows, it puts perspective on how powerful that run in Nvidia is. And you know, we've mentioned the strong possibility that Nvidia is in a hyperwave, and I do think it's in phase 4. And I still think it probably can go significantly higher before breaking it, but that is what you would expect out of a hyperwave. If we go back to Bitcoin, so look, this was Bitcoin in a hyperwave that Tyler Jenks taught us on the way to 20K. And if I'm looking at this Fibonacci from the 2013 high down to these bear market lows, Bitcoin obliterated the 4.618. The 4.618 was at $4,600. So that is what we're seeing out of Nvidia, is what you would expect in a phase 4, is just extension after extension after extension after extension. So what I'm hoping for, of course, it would be great to trend to the 5.618, but I have mentioned early in one of the really early streams, I have mentioned that I have noticed a pattern historically where the 1.618, which is currently sitting at $102,000, just a little less than twice the price. This is an area that typically gets pushed above and dipped down into. So whatever happens here, I still think we can trend into the 40Ks. I'm not mega bullish right now, but I will be looking to see how and when Bitcoin can trend into this 1.618 area, because I do believe that is the final dip before it goes kind of into its final phase. My semi-conservative target remains this area in the 2.618, which is sitting at 155K. Assuming we haven't come into a cycle top, which I do not believe we have. And I'll kind of show some evidence to that. And I will also show one bearish scenario. It's an idea I've had for a long time, that Bitcoin actually does not produce a significant new all-time high in this cycle. And it has to do with modeling Microsoft and Berkshire Hathaway, but we'll get to that in a minute. So let me just breeze through these really quickly. Here's my halving cycle. Let's see, where are we? We are on day 70. Still not really anticipating anything till around day 100 to 150 September. I still think that we could have one more low in September. And then by then, if we're not seeing Bitcoin showing some strength and starting to trend up, I will start to get concerned. But so far, normal post-halving. So now this is something interesting. This is the Bitcoin chart using Heikin-Ashi candles on the 3-week. And it's a pattern that I've noticed throughout history. And we got kind of a bearish signal on this last candle close. This last 3-week candle just closed. So if we look, anytime, we can go all the way back throughout history, 2013, January 2014, 2016. Anytime we have a red candle close, it's a sign to pay attention. When we have 2 red candle closes, that is when the possibility of, at minimum, dropping to the middle Bollinger Band is in place. So this current candle was a warning. It closed red. However, it did close above this really important moving average. Right here, we have looked at this. This was such an anomaly to at least not have dropped down to 23K, 24K. This was kind of front running the hype of the ETFs, I believe. But if you look, every single time we've had even just one candle close below the moving average after a red, we've at minimum tested the middle band. So unless we see some kind of strength over the next couple of weeks and get the price back above 59,000, which is where you were mentioning, Tone, 5960K, I'm still standing at a long-term target of 48,000, which is still in the realm of strength in a bull trend. I really don't get too concerned until the price is below maybe 44, 45,000. Let's take a look at the hash ribbons. Nothing. We're waiting on this buy signal. The drop in the price is allowing that the hash power to kind of level off, but still no sign of strength to try to get a moving average cross. So we're still probably a minimum of a month or two away from any kind of buy signal. Now, the past analysis with this particular buy signal is it's not a trading signal. It's not a buy. It's just to kind of suggest, hey, the perhaps the daily swing low is in, and we might even consolidate and drop a little bit lower, but there's a pretty good chance that the miners are recovering and they will stop selling, and we will have a chance to reverse the market. So I'm still watching that. The next thing I'm looking at is, this is interesting. I got to go back on Bitcoin. Well, real quick, one thing I'm not sure people are aware of is the total market cap has not produced a new all-time high. It is still struggling, and I'm pretty sure I've got a Fibonacci on here. I do. So if you remember, I'll try to make this less cluttered. If you remember, early on, I was talking about the importance of breaching the 0.886 Fibonacci, and we can see very, very clearly that that is exactly where the total cap stopped, right on that fib, and dropping, and it's now trying to establish 0.5 or the 0.486. What needs to happen for total cap is to start settling again, closing weeks above the 618 to try once again to try to push above 3 trillion. And once it's above 3 trillion, I do believe things are set, but that's not really what I wanted to show you. There's something really interesting happening on Bitcoin. I put this on my Twitter page yesterday. So if I put my Meso EMAs back on, throughout the past several weeks, I have highlighted about 4 hidden long-term bullish crosses on several time frames, and we've got another one confirming now. So if we look here, we have only had this cross below twice, February 2017 and December 2020. We just got it again right now. Now here's the most interesting thing about this particular cross on this time frame. Both times we got the cross, it was when the price, let me zoom this in really quick. It was when the price was tackling that prior all-time high right here. And this was about a 30% drop, maybe 35% drop down into this really key moving average right here. This is a Fibonacci number. This is a 34 EMA. And once that held and these moving averages had a chance to diverge, off price went. Going back to 2020, same scenario. The cross took place right at the prior all-time high. There was stronger demand in 2020, so we didn't get quite the dip. However, dropping into this cross is not anything out of the ordinary. So here we are one more time. As the price was approaching the prior all-time high, here we are experiencing about a 27% drop. Now, this moving average, that's the green one, that's a 55 EMA. And on this time frame, if we look back throughout history, this was basically the base in 2016. Even back on this double top, this double parabola scenario in early 2013, 2014. It was this 55 EMA. This was a massive drop. I think this was like 80%. Let's see. If we go
It
wick to
was.
wick. Yeah, 75%. But this moving average held. So the hopium is that the weekly or the 4 or 5 days base off of 55K, get MRI turned around, get an MRI buy, and start trending up. Now we can see right here on this top of the 65K top, this moving average did not hold. It held and got some really strong bounces. So if I add one moving average to this, there it is. So this is another Fibonacci number, 89 EMA. That caught the lows. So what we're looking for, worst case scenario, is 48K with allowing for wicks. These moving averages are never going to catch the price perfect. So I'm still seeing the potential for a drop below this moving average base off of here, September, and climb up. However, I'm not ruling out the possibility that this area holds. That would be fantastic. Really quick, I'll move on to one other thing. This is really interesting to me. I've mentioned on a couple of episodes that I'm seeing some similarities between gold and Bitcoin. We mentioned, triple tops, quadruple tops. We have gold poking at these highs once, twice, 3 times, 4 times, while creating this broadening wedge. And once it finally popped out of the wedge, it was off. So I'm pretty sure I have this highlighted in a similar fashion. There it is. So Bitcoin has produced a very similar broadening wedge. I've got more drawings on here, just kind of show you what I'm looking for. It's possible right here, these lows hold, and it makes the move up. To get above the wedge would require, or above this trend line would require 70K. I still think it's possible. If we look here, this trend line I have drawn goes all the way back to November 2022. It held those lows. It held 2023 lows. We had a trend line right here. If I highlight this one in different color, just do it in blue, we can see that this trend line was holding for a good while, and had the price popped above 73, we'd be off, but we lost it. And I think it's possible to get one more test of this trend line in the 48K range, but that remains to be seen. So here is one other bullish cross. This is one of the other bullish crosses that I mentioned a few streams ago, where we got the 55 EMA crossing the 55 SMA. And again, it's very similar to the cross that I showed earlier in the stream, just on a different time frame. Also happened at the prior all-time high. This one happened a little bit higher. No, it actually happened right at the all-time high. So I'm still seeing the overall structure as early bullish. Early bullish. I'm not worried about these drops. I get concerned if we can see here. This is the 21 EMA. This was key. This was kind of like the key base all through 2020. And when it was lost after the 14K top and then through the COVID crash, now this didn't hold. I mentioned this before. When we have the EMA crossing below the SMA, much less likely to hold. So it was not surprising to lose that support. Right here on this drop off 65K, we can see that it was the 21 EMA. So this is some evidence to support the idea that 50K is still within the realms of bull market support zones, even though we have gone past that. Now, this one's interesting. So, Tone, you went to cash based on 4-day Consensio, correct? Okay, you're muted, but I saw you say yeah. And this is why we like 4-day over weekly, because right here at this candle close, which happened on June 17th at a price of around 64K, would be an opportunity to start selling. Like Tyler Jenks might sell 25% of his position and wait for some more moving averages, but he probably would, according to his Consensio system, he probably would also be sitting in cash and would not be interested at all in longing again for the long term until the price was back above the black moving average, sitting at 65.3. However, he was even more patient. He wants this moving average to settle, flatten, and roll up. So if we kind of project this into September, what I'm looking at, I would not expect, maybe with the price above 63K in September, will it be ready to roll? So this is one of the reasons that we prefer it, because the weekly is just now telling you to consider getting out. So the 4-day gets us out much sooner. But I will show one interesting look with Consensio that kind of helps support my 45 to 50K zone. So this is the 2-week chart. I would kind of consider this to be similar to viewing Bitcoin, I don't know, maybe on monthly, because of the 24/7. So this is zooming out a little bit more, and we can see that on the 2-week chart, Bitcoin is in a bull market as long as the closes are above the black 30 SMA on 2-week. As soon as you get one close below, it's not good. It's never good. Held all the way up until 7K after the 20K top, held this low at 6,500, but COVID crashed right below it, bear market. It held, this is why I like the 2-week, it held this 28K low perfectly right here and got a strong bounce. However, one closed below the 30 and it was silent night. And you can see how important this moving average is on really any time frame. This was your last chance to exit at 46K. Selling into that bounce, or that would have been a perfect long-term short for Bitcoin, a swing short lasting months. And right now, we have the moving average curled up. It's trending up strong. Yes, we've lost these moving averages here, but as long as the price is going to hold above 45K, I still think that the structure of the bull market is good. And this is another thing. So Tone, here is another support for your exiting. This is that long-term Fibonacci, and we still haven't gotten the cross. However, you can front run this at this point because these moving averages are going to cross, and you're kind of waiting for the first red candle to close after the cross. Back here, this took place with the price at around $57,000. So in theory, yes, we can buy the dips down to 45,000. However, Bitcoin is a sell if you're trading all the way up to $63,000 and really not interested in entering back again for any kind of long-term position until above there. And right here is a rare shakeout. This is not a perfect indicator, but is a great, simple investment strategy where you're not trading in and out and losing all kinds of positions. So we can clearly see that Bitcoin is sitting in a pretty bearish posture. The next thing I was looking at is this. This is a little bit scary. So we have this Bollinger Band squeeze right here with a significant close below. Now, what's happening right now is expected. Once you close below the Bollinger Band right here, you're looking for a test. When you close this far below the band, you're looking for the next candle to test the bottom. What I would like to see is this candle to close green inside of the bottom band, currently at 57,320 right here. That would give a chance that this is a bear trap right here. However, the longer term analysis is whenever you get a close below the weekly Bollinger Band, you are likely to see lower. We had a nice bounce here, but a lower low. We had a nice, here's a close below, we had a nice bounce and one more lower low. So this is a warning sign to be cautious of looking for lower lows, but even more dangerous is how tight these bands are squeezed together right here. It could get pretty ugly. And quickly, we'll look at the pi cycle. Short-term moving average, the price is trending below it, which is okay. We saw this in 2016. It's okay to trend below it. What we're looking for on this is to get the price back above 65K. There's that key 65K range again. And this really quick is a quick look at just a long term. I was really hoping that this ascending triangle idea held and we were moving up into the 80Ks. However, we've lost this trend line again. This trend line is going to require the price basically to get back above the prior all-time highs one more time. And the last thing I want to look at is this. So I think we've lost tone. Tone, how much were you drinking tequila last night? You're muted.
No, I'm listening.
Okay. I've not shown this. I haven't shown this on the streams yet. This is something I came up with years ago. It is all based off of the bottom moving average, which is just the weekly 200 moving average. And there's no science or math behind this. This was all best fit. However, every one of these rainbow colors is a multiple, a random multiple, best fit multiple of the black 200 EMA. And we can see in the prior bull runs that this blue multiple is what is really needed to be established as long-term trusted support to try to get the price trending above this area. The purple one is when you have a chance to launch into bull market mode. And it's just interesting, like this 14K top ended right below the red. Once the price was above the red in 2020, it shot right back up to this next level. And we can see how each level acts as resistance until it's picked up and the price just shoots back up to the next level. So we can also see this. This only goes back to when the 200 SMA began.
Hey Mark, what kind of multiples are these? Because the space between them is not even.
No, it's not even at all. Like I said, in fact, I initially did this tone on the 3-day chart. Okay. It just happens to be very clean on several time frames. And the multiples are very random. Let me see if I can find them in my settings. They're like 2.8, 1.45, 3.8. It literally was just best fit. However, I did this in 2017. So I haven't changed any of these settings since then. But I want to go back and make this best fit on 4-day or 5-day. However, it's still holding up. And one thing that's interesting, it shows us this idea of diminishing returns, because these two initial tops going all the way back to 2013 topped at this gray multiple, which I don't remember where that is. Let me see if I can find where that is. It's not there. There it is. So that was 15x the 200 moving A. the 200 moving average. That's how insane that move was, 15x. So, but we can see each top levels down. This top, the 20K top, dropped down to the yellow. I was looking for, as we all were looking for, this area, like this 65K top. We were all looking for around, let's say, 80,000. I was really thinking 80,000 was coming.
Yeah, that was my target. It was like 84 to 88. That was my target.
That's exactly where I was looking. When we started picking up this moving average, or this deviation, I was thinking, okay, but you can see when I zoom in, it could never really establish consistent closes above this area. We had 1, 2, 3, 4, and then a drop, 2 and a drop, and then it was resistance. So if we're looking at this as far as level to level dropping down, it is this green that I would be looking for, which is rising along with this 3-day 200 moving average. I'm looking for it to rise into 2025 around 150,000, which is kind of where I'm still conservatively looking. However, it's amazing how clean this looks on weekly as well. So we can see the price is battling to hold this 55K area, 54K, and which held as resistance for 1, 2, 3, 4, 5, 6, 7, 8, 9 or 10 weeks. And then as this weird phenomenon works, as soon as it's picked up, the price just shoots to the next level. It happens very, very quickly within a matter of just a few candles. So what we would be looking for, not surprisingly, is to pick up the purple, which would require the price to be at a new all-time high. And I do believe that once a new all-time high is established, that we're going to see the price trend up to this 100K area quite quickly. What do you think about that?
No, I really like that chart that you had, and it does give 55,000 the chance. Remind me when I get the screen share back to show the stats on Bitcoin ETFs buying Bitcoin, because Bitcoin ETFs have been buying Bitcoin. I don't know if you've been paying
Yes,
attention to that,
I
Mark,
have been. Yeah.
but the last 2 weeks, there's been positive inflows. And I
Yes.
just checked. I just hit the refresh button. Yesterday, 5,000 Bitcoin was purchased by the ETFs, not sold.
Yes.
And I don't know what it's doing today, but
Well,
I mean, where is this Bitcoin coming from? Like,
well,
it's gonna run out of Bitcoin. I mean, look, I'm just waiting for September. I keep using the same silly analogy. We are dealing with a boxer going into the final 3 rounds, gassed, but up on scorecards. And all he has to do is stay up.
right, right. Well, in September times also with many things. It times with 60-day cycles. It times with election cycle this year. And now the stock market. So Bitcoin typically, from my analysis, has topped in August in election years. The S&P tops in September. So we're expecting Bitcoin to drop and consolidate into September and then start to base wherever that base is. It could be at 45K. It could be at 55K. I don't know. But I get concerned if we're still watching Bitcoin trend down strongly past, let's say, mid to late September. But what's happening? So this was a projection I put out. So we can see I actually was not anticipating the price to be above the prior all-time high until December of this year. And that's based on some past analysis. So to have jumped above there, but look, it's actually right where I would have projected it to be in July based on this. And I actually have the price dropping back down to 43, 44K. So this sideways action of not doing much of anything and giving a little bit of hopium in January of 2025, but still not really pushing above that all-time high. It's tracking kind of what I expected to do outside of this anomaly of jumping above there. And here, right here at this 2.618, which I mentioned earlier in the stream, is where I've kind of projected with a timing around September 2025. And there's some science behind that, as well as some high level guessing. And Tone, to go back to like your question of where's that Bitcoin coming from, of course, you've seen the news about Germany dumping like $1 billion worth of Bitcoin. You've seen that story, right?
Yeah, I saw it. I saw it. No one actually knew Germany even had Bitcoin, so I think that just scared people.
Yeah.
I'm more curious, what is that blue line?
Oh, so this is the blue line is this is just a very long-term projection that I've had, and this is based on Microsoft and Berkshire. They're the only two stocks in the entire stock market that I found that has anything remotely similar to this growth pattern that Bitcoin has. And it's very hard to see this. What happens is this curve eventually, like this, here was this deviation in 2020 is common. It happened during the stock market, the dot-com crash, and the price picks it back up and then starts to go into this hyper parabolic move. So this is what I've been looking for. This next bear market low, I mean, it could crash down to 26K. I don't think people are expecting the price to go that low. I don't think people are.
Right. That's the what I was gonna say. I would look. I agree with you that I did not expect Bitcoin to break all-time high last year going into the halving. I didn't expect the all-time high of $65,000 to be broken at best around now. At best, more likely towards the end of the year, like September, October is when I expected Bitcoin to break the all-time high. But if you go back to that chart, no, okay, you're pulling up Microsoft, I see. And
I'll go
yeah,
back to
this
it.
does look similar. And
Yes.
but I do think that that blue line that you have, you drew that X where that line starts to go from convex to concave,
Mhm.
or is it the other way around? Um, I think that it should be a little bit steeper. I think Bitcoin is. I don't see Bitcoin going down as much as you projected on the next bear cycle.
I'm
So
not
I,
either. And I actually made that drawing a long time ago, probably a few years ago, and I will revise it. But I'm just showing you here that, this this was the 2020 deviation in Bitcoin, where it actually broke this parabola, this initial curve, and then you can see how the price just based flat. And what's crazy about this, we forget about this, but um, it took it took Microsoft years,
15 years. Yeah,
years
just like the Nasdaq took Nasdaq 15 years.
to get back to a new all-time high, and then that
Right.
sent it into this next parabolic phase. So I have had. So here, I'll go back to my chart really
Can
quick.
you pull up? No, wait. Before you do, can
Yeah,
you do the same thing with Apple?
yeah. Apple's structure is a little bit different. It's mostly just it's mostly just that curve. Like this was all accumulation, decades of accumulation, and now Apple has just been sitting kind of in this arc like this, and just climbing up it. Something like I'm like, there you go, something like that. And now maybe Apple is starting some kind of a move like this. Maybe the arc has changed right here.
Yeah, but I think that's more due to inflation, not due to Apple doing something amazing.
Right. And then the other one, the other chart, I actually have these. Let me see. Uh,
That's interesting. Yeah, let's go back to Bitcoin on
Yeah.
this.
So here, so this
There
is,
we go.
yep. So this is an idea. Let me see if I have it. I think it was back here. Okay, so is this one. So this is an idea that I've had, where it's no one likes this, but
No, I don't. It's hard to believe that Bitcoin would be that cheap in 2026.
I know. But it's just an idea I've had for a long time where this cycle sucks ass. And we're all expecting it to go to 100K and well above. And it literally does nothing except for accumulate sideways for years and really doesn't pick up this strong move until the next halving. And then it will be a monstrous move. Um, and I believe this is where I have, um, well, let me see. Yeah, so this is where I need to readjust this. So there was a parabola here that was broken. And I was expecting Microsoft to crash harder, but it did not. But this is that pattern that I'm looking for in Bitcoin. And the other one is Berkshire, but it's Berk. Tone, what is the difference between Berk A and Berk B? Do you know?
Berg B is affordable to people like you and I.
Yeah, okay. So is it like an ETF of Berkshire
No,
Hathaway or
no, it's literally traded in two different ways. I mean, look, some companies just have, you know, uh, you know, all companies are equal, but some are more equal, right? So going back to Animal Farm, so Berkshire Hathaway is one of those people. It's literally traded in two different ways on the stock market, and one has never split, and the other one has splits.
well, check this out. So this again, you can see this same growth pattern I was talking about, this long curve. We had the dip below, reset, and then Berkshire has just been climbing up this parabola. But this last monthly candle was pretty nasty. Like if this really turns into a long-term top,
Can you check the MRI on that?
yeah, we'll see where the MRI is.
It's still clean. What about the weekly?
Look at that weekly.
Nah, nothing. Nothing.
That was a, oh, was that? I wonder.
No, nothing MRI based.
Not really,
It's
right?
still, I mean, like it still is bullish to me. Uh, remember they had something was weird with Berkshire. Remember how there was a
Yeah.
data error that crashed the stock? Are you sure that was a real move up? Can you check the
No,
daily? Maybe that's another data error.
I think it might be a data error. I really do. That just doesn't look normal. That's because
No,
the
that's a
act.
data error, and you can verify that, right? If you open up the B shares, you're on A, right? So see if the same spike exists on B. You can just change the letter. Yeah, see, it's not there.
Yeah,
Yeah,
yeah.
that's a data error.
That's what I thought. Yeah, it just doesn't look right. So it's just tracking. It's tracking fine. Let me see if I can go find my that initial one I was on. Um, yeah, here we are. So So yeah, I could very easily. I mean, this was very. So look, Tone. This is why this. I think the reason I came up with this price range of whatever 25K is. Um I probably just put an estimated drop of 70-80%. So I just added the 80% drop. Um, but is Bitcoin going to drop 80% again off of a high? Probably not. As the
Mark, what if you put that X right at the last low, and then bend your parabola? Oh, it's not an X, it's two arrows. Okay.
yeah.
And then bend your parabola up. That that seems a little bit more likely. In fact, again, if you started a little bit earlier and you match the secondary low
Of this right here?
with the primary low, you
Ah,
then avoid any major crashes. I think that's more likely. You know what I mean?
yeah,
Like that, but not as. Mm, if you
right?
started a bit later, like if you move it, yeah, to the left a bit, it's not going to be as steep. Nope, the other way.
Like this?
Well,
I
right,
might
but
have,
bring that point, but bring your circle, the middle circle, bring it down to the left. The
uh,
middle circle, not that one. The next circle
I don't see a circle. Oh, this
on the right. Nope, in the middle of that
right
arrow.
here, right
Nope,
here.
not that one. On the right. Move your
This,
cursor
this.
right.
Oh,
Nope, that's
right.
left.
Got you, got
Right.
you.
Keep going, keep going, keep going, sir. Yep, that circle there. That
There.
one, right. Bring that left. There you go. And
Yeah,
now down.
I have to
Yeah,
redo this curve. I'm gonna have to redo the curve.
yeah.
But this is so the point in all of this is that, well, first of all, I've looked at hundreds and hundreds of stocks, and those are the only two. Berkshire and Microsoft are the only two stocks in the entire stock market that have the same growth pattern that Bitcoin has. And um, I would not be surprised if this just drags on sideways, comes down at some point in the bear market closer to the 200 SMA on weekly, which is currently at 36,000 and trending higher, and then sets up. Now, do I think that's going to happen? No. I actually still think that Bitcoin's going to because if we go back to the analysis earlier where I just showed that massive cross on the 5-day chart, suggesting that we're just in the very early stages of the strongest phase, that's what I still think is the most likely scenario. I just kind of wanted to introduce the idea that maybe all dreams are shattered for for a while longer. And I think that's all that I had. There was one thing I wanted to show on Tesla
Yeah,
that
so it will be interesting. I mean, the scenario that Bitcoin will get stuck between, say, 50,000 and 75,000 until the 2028 halving. And when I say 2028 halving, I don't mean literally the halving. I mean like countdown to the halving with 3 months to go is close enough. So and also if that happens, by the way, the halving is going to be grossly delayed. Miners are totally fucked in this scenario. So don't expect a massive rise in hash rate. So far, every single halving has been sped up a bit. Most recent halving was in April. If this scenario holds true, the next halving will probably be in July,
right.
not in March or February. It'll be in July of 28. It's going to get delayed by 2 to 3 months,
Right.
in my opinion. And that's not a scenario I want to see. I got, some bunker investments to make. Who knows what the hell is going to happen going into 2028 with the
Well,
current scenario,
you're gonna
with the
have to
current geopolitical situation.
you're, you're gonna have to stock your tequila bar with like some bottom shelf
I'm
items.
gonna have to start digging the bunker instead of investing in one. But
Well, save some room for me and my animals. So I know that you've been we kind of were disagreeing on Tesla the last time because you were looking for it at the top, but I was still seeing it wanting to trend higher. And this is interesting to me. I do think you're right. I do think the daily is going to eventually find a top, but this is a nice broadening pattern with plenty of touches on the bottom side. Tesla is breaking out of. And this is kind of what you would expect, a drop kind of right into the central part of the wedge and then a move back above. And this top trend line that I have drawn is as conservative as I can draw it. Like I've just gone wick to wick to wick. And so this is a very, very clear breakout this week. Now, what we might look
It
for,
needs to hold it. It needs to hold it. And
yep.
there is, the weekly MRI still has room. However, this is also the end of extension B on the weekly MRI. I don't know. Honestly, I think Tesla tops today. I just,
So
I know it's hard to make these calls to the day, and I'm not ready to short Tesla yet because everyone knows I missed my Nvidia trade.
okay, but
And
so let,
I would have been a lot. It's very risky to short Tesla. I mean, I had much more confidence in shorting Nvidia than shorting Tesla. Shorting Tesla is like shorting Bitcoin.
yes.
But I just I can't see tomorrow closing higher than today. So what that means is either Tesla has already made its top or it will make an intraday top tomorrow. But either way, the close tomorrow is lower than the close today. And I think the whole market is about to top this week.
Well, so what's taking place right now is one of my, so I've discovered something with MRI that I think you might be able to code into it eventually. So what I look for with the MRI is we've got this resistance slash accelerator right here at $275. I have noticed a pattern over and over again in so many assets. It happens in crypto, happens in traditional markets, where you get this run up to exhaustion and you might get a 1, 2, or 3. But if I see a green, like let's say in the next 2 days, I don't think Tesla's going to trend that high, but it might. That is when I would feel comfortable shorting. If it's on a 2 or a 3, after this MRI warning and top signal, without a correction, there has to be no correction. If there's a correction, this isn't void. But what typically happens, let me see if I can find an example of it, is a wick, you get a wick above here, and that sets the trap, and then a sell off, and which would actually be perfect because what I would be looking for, you want to know if this breakout is legit, and so this is prime for a bump and run, a top up here, turn around, come down and test probably one or both of these trend lines, and if they hold, that's golden. Tesla is probably set for a good while. Now the monthly, however, look how strong the monthly is.
I know it's strong, but again, this is not based on MRI. I would have never entered on a monthly scale with this candle.
Right. So just going to what I would look for is if I just put on my simple moving averages, if I just use an orange and a yellow, all I need
In a perfect world, today's top is the top for the year on Tesla, and the monthly breakout takes place in like December. It resets. It gives me. It'll probably give me a red 2. It'll give me a green 2. It'll give me a green 3, and then but without a green star candle, because remember, a green star has to break the prior month's high. So either it flips back to a red and then reflips, but either way, in a perfect world, I'm going long Tesla at approximately $250, somewhere between 250 and 275, under 300, but on a green star candle in the beginning of a month where it breaks it, and not after rallying like 80%.
No, this has been a super strong rally, but right now it is definitely looking like it's wanting to at least try to tag this top band. Let's just see what the weekly looks like. See, so this is really bullish. It's just bullish tone because we had a band squeeze right here and this massive close above. Now, like I mentioned, same thing happens when you close below. When you close above the band so far above, the price is going to want to test lower. And currently the
Right.
top,
I mean, again, this is looking at Bollinger Bands, and I'm not a Bollinger Band expert. I'm actually not even a huge fan of the Bollinger Bands, but this to me screams top. Like, this doesn't scream to me more candles, to the upside. This to me screams, based on Bollinger Bands, it's overexhausted.
Yes, except my bias is always like, for instance, right here. So here was a band squeeze. We got a massive green candle closing above it, and we got two higher highs, and finally a topping candle, and still one more higher high. So what is likely going to happen is this. So this band is adjusting to the median. It's going to, as this median trends higher, it's going to look like the price tested this band in history, even if it doesn't drop down to 238. And if this week closes above, well, so first of all, we've already gotten this signal. This
Right.
signal suggested a new high, which we got. So if this candle closes above the band again, my bias is going to continue. I understand that there's a potential topping coming on daily. And if if however, even on daily, if the daily closes above 252, and we can see that that top band is resisting the price, and there is a massive gap. There's a big gap down here at 200, which the middle Bollinger Band after a top, as this trends into that gap, that would be a great buy. There's some gaps down here too at 197. I know you were looking for the price to eventually come back down here, and it might, but the high time frame, like here's a 2-day candle. Where's the MRI on this? Oh, look at that right there.
Mm-hmm.
So here's your argument right there. There's your top.
Yeah, I mean, look, I honestly, I think it's top. I think today is the top. I could be proven wrong within what, 20 hours, but
Yeah, well,
I really think today's the top.
we'll see. Let's see what happens, because my TA is saying if this closes above the top band, even with the MRI giving us some warnings, still to hold a bias to the upside. Now, what happens, Tone, um if like the next 2 days starts closing above 265? Are you going to start looking for another MRI top?
Well, no, I'll be looking for the weekly MRI top, right, which is 3 weeks away.
Okay. Yeah, that makes sense. That makes sense to me. So Tesla is Tesla looks good. I've been bullish on Tesla basically ever since this breakout down here. When you get a tight squeeze on a high time frame, same thing kind of happened down here. We got this close below on a band squeeze, and it just expanded the move significantly to the downside. And one more time, we got to close below. Yes, you're going to get a bounce, but as long as the price is trending above here, and I think I mentioned this before, but what got me studying the Bollinger Bands was a stream you did with Tyler Jenks many, many years ago. And I didn't know too much about them. And he was looking at Bitcoin at a monthly chart. And I remember him saying, "Oh, wow, if this month closes above the top band, um, it's on." And that got my attention. I was like, what is he talking about? And so I really started studying them. And I mean, he is right here, right here. This was the perfect scenario. This was a monthly green star closing above the top band after a bit of a squeeze. It's hard to get a tight squeeze on monthly. That just says you're in. This is getting you in at 38K, and you had a nice run to 70K. And then this is your warning, a red candle closing inside. It's not a confirmation of the top, but it's a warning to pay attention. And we're still holding above this really key moving average. I wanted to show something really quick on CME. It's on the daily, because I we ignore CME quite a bit. However, there are times when the most important information that's happening is taking place there. So let me show you what I was watching on CME. So on the
You
daily,
you can double click the price in the price, just double click and it'll reset.
in the price.
Yeah, double click, yeah. There you
Oh,
go.
perfect. All right, so um, here's my EMA SMA TA. CME looks different. Let me go back to the spot real quick. So I was mentioning streams ago, hey, the price is going down here. It's going to test 58K. I had 95% probability in that because I trust these crosses. You're talking about 200 moving averages on daily, 200 period on daily. And I was actually expecting the price to do exactly what we saw here and pull below the MAs, which we got, and which was what we're experiencing. So now here's some hopium real quick, and then I'll go back to CME. I got a bunch of drawings on here, but let me just show you. So this bottom right here dropped to about 8.5% below the area of the moving averages. The current drop is about 8%, almost 8.5%. So we're still hopium tracking this summer consolidation right here, and just need some sideways into August, September, and off we go. However, I found it interesting that CME, and sometimes I don't fully give credence to a signal until it's on both spot and CME. This is still bullish. So until now, I'm not liking the postures of these moving averages at all. It's very much looking like the black is going to continue to trend up, and this is going to cross, and we're going to see the price below 50K. I mean, there are just so many examples of this happening, of the price getting pulled down into the cross as the purple. So you do expect the EMA to hold. And at the very least, like for instance, this was a perfect example right here. We got this bullish cross off of the lows. So when I started seeing this cross, even though everything was bearish at $15,000, I started buying. And telling a couple friends, hey, this is risky. We could easily go down to 12K, but this is telling me momentum is shifting. And just like a magnet, this cross pulled the price up. The EMA held the first bounce, didn't hold the second bounce, but because it is still above the SMA, that SMA was support. That will be the case with CME still. 51K is still going to be support until it's not. And as long as the price can base and hopefully trend up, we are not going to get this cross. However, if I see this cross on CME and on daily, I'm definitely looking for the lower prices. I'll show you really quickly what I still believe is going to take place. I mentioned on spot a couple of months ago that this was a potential top. It's not confirmed. I do believe it confirmed on this candle by taking out the low. It will absolutely confirm if this current candle closes below the low. And at that point, the minimum target to be looking for is this orange moving average, which is fine. It's right in that 45 to 50K range. But I'm still thinking we're going to see sideways and a drop into September. And I do have, where is this? And here's one other thing I'm watching that is a little concerning. So to put it simply, I'm not bullish. I still think Bitcoin has some dropping and some consolidating to do. I think that I'm going to throw out a random number of about 48% that 56K holds. However, when I zoom in, if we are not seeing the price back above 62K on the weekly basis very quickly, this orange moving average is going to cross, and that is going to open up the target area of the lower Bollinger Band, which is climbing right into that 45K range, which is right where the bull market structure gets fragile. So we had one close below the middle band. a second close or a third close below is even going to open up this target even more. So I'm still kind of anticipating that to be the case. One other quick thing I had to show you, Tone, is if we're going to use the model of last summer, we're tracking fine. We can see this dip on 3-day came right to the bottom of the channel, consolidated. This took months to dig out of, and the bottom of the channel still allows for a slightly lower price of around 52,500, and settle here and climb up. So as long as the price is closing inside of this channel, but there are so many examples to show us that once this channel is lost, it's not unreasonable to look another 8 to even 20% lower best case scenario. This is a 20% drop below the channel. Right here is 25%. So let's just project that. Here's our bearish projection. Oh, I already have it. 42K. And if we start seeing closes below 52,000, I do think that some of those more bearish scenarios are going to open up. Thoughts on that?
Well, just a general thought, right? We've been on for an hour and 15 minutes or so.
Yep.
And the overall thought is there is, a puncher's chance that 55 was the low and it's reversing the price. The more likely scenario is one more punch to the face that knocks us down to 48, 49K. That is the slightly more likely scenario.
Yeah.
A smaller probability than either of the two I just mentioned is a move all the way down to 42K. It's unlikely versus the other two scenarios.
Totally agree.
And either way, don't expect much until mid to late September.
Totally agree, 100%. And so really quick, and we can wrap it up. So I'm a cycle guy. I'm believing in them more and more. If you look at Bob Lucas's Twitter page, he's put up some cryptic posts in the past week or two, and he's saying, listen, don't get shaken out at the end of a 60-day cycle. So I was projecting a cycle low to be sometime around July 1st. Now, so far, this low came on July 3rd. I'm not fully convinced that this is the low, but I do think it might be a low for at least the month of July, which would hold this to be true. And I'm now projecting the next low to come in early September. And that low could either be a higher low above 54K, or it could be a lower low down near 48K or even 44K. But it's my hope and my expectation that this is going to be settled by September. And at that point, the accumulation and the consolidation and the shaking out of the ETFs and the buying of the ETFs and the election nonsense should begin to settle down. It still could move sideways for the rest of the month, rest of the year, really, and then start trending up to try to take out these highs. And once again, on the very first stream we did with my analysis on the 2-month chart, I said I would not be surprised if we don't see a new all-time high for the rest of 2024. And so far that's tracking. We might get a new all-time high closer to December, maybe late November, which would be fantastic. But what's happening right now is based on really high time frame TA, kind of what I've been expecting. So if you're out there trying to figure out what's your play, well, we've showed you that our long-term models are suggesting to kind of like be out of the market. However, I also see that we might have a few more months of accumulation. So if you're a knife catcher and a risk taker, averaging in some buys at these lows with money that you can afford to lose or not need for a while, be very clear about that, might turn out to be an incredible move in 2025, but you kind of have to have an exit plan. I would be kind of considering fully exiting anything below 45K and just waiting for things to settle there. So that's about all that I have for right now, Tom. It's a good amount that we covered.
Yeah, I just got a few minor things to add. Let me grab screen share.
Hold on real quick. Sorry. Before you grab screen share, I just want to show this one thing. I don't track this very often. This is probably something I would imagine that you're not a fan of. I do track stochastics and I do track RSI. I do not track the stochastic RSI. However, this is something to consider. The stochastic RSI is at historic lows right now. So this is an argument. Now we do have to be careful because sometimes you need divergence. So you might need one more lower low on the price to create a higher low with the stochastics or the RSI. However, it's going to be difficult to push the price significantly lower right now. And what we're looking for with this particular indicator, this is just a standard stock stochastic, is to get this weekly cross, which is starting to happen. And right here, I was watching this very, very closely. You need follow through. It's like we dipped. If we look at the price, if we look at the price right here, this was turning over at this low at 56K. And there was some hopium. However, this stochastic RSI needed to trend into the 30s to keep the momentum going, and it rolled over again. So now we're going to be looking for same thing. We're going to be looking for so the blue is crossed. We need this to flatten, reverse, and we need this at least into, let's call it 30. 20 gets us excited or gets our attention. 30 gets us thinking that the lows are in. So I just found that interesting. I mean, when you see something like this where like this is as low as it's ever gotten in history, and I went back and checked, many of these lows were legit, although some of them did lead to lower lows and prices eventually after a reversal. Okay, I'm done.
All right, so the only thing I really wanted to pull up was the chart of the NASDAQ. I don't know if you watched our show with Matt McGregor yesterday. So if I go here, and let me get rid of this. So this is the monthly chart of the NASDAQ. Just wanted to show the monthly that it's on an MRI top. But it's the weekly that had me very convinced. And this is why I'm very confident that Tesla's high is in and Nvidia is not going to break the high. Is that the weekly, the NASDAQ topped last week, but at the top of the candle. So I never got a chance to really do anything about it. The real indicator that really scares me right now is the CMF. Look at this massive divergence on the NASDAQ.
Hold on.
In the CMF.
Are you sharing your screen right now?
I hope so.
Because I'm trying to find.
Yeah.
You got it?
Got it, right? So this divergence in CMF is what's bothering me, because it takes volume into account. So something is off under the hood in this massive rise in the NASDAQ into a weekly MRI top last week with a very, very weak CMF.
Yeah, I can see that.
That's very concerning. Okay, it's pretty much the opposite of what happened in the secondary low here, right here, where right there, where the price is going lower, but the CMF is rising. And here, the CMF is completely crashing. And meanwhile, the price is just going higher and higher. And if I look at the daily CMF, we're on a warning candle, not CMF, sorry, the daily NASDAQ. Oh, look at that. Tomorrow is the MRI top, with today being the warning. So this could be the difference with SPX.
Yeah.
See, the S&P, waiting on MRI. Oh, the S&P is today as well. MRI top on the S&P today. NASDAQ's top comes tomorrow. I think everything's stopping here. So, but other S&P indices might have different, let me see. Nope, same. Yeah, SPY. Yeah, there it is, right? SPY will cut up tomorrow. Everything's stopping here. And QQQ. Tops tomorrow. Yeah. So here's your NDX with the MRI top coming in tomorrow. The weekly is in, the monthly is in, and the daily arrives tomorrow. This is why I think everything tops. And this does not do Bitcoin any favors, by the way.
Right. Exactly. And actually is right in line with kind of what is expected during the election years. Like things really slow down July, August. I mean, sometimes summers are slow in general, but pretty much by mid-August, the S&P has found a top, and we're not looking for a crash, maybe a 10% adjustment, maybe something bigger, but for things to be starting to run out of steam and slow down now, it's kind of what I would be anticipating out um, of the election year. So
Right. And look, one more thing I want to point out to the viewers. The futures are nowhere near as aligned as the spot. So here's S&P futures. The MRI is not aligned. The MRI is halfway through its upswing, which is why if I look at my daily futures versus Bitcoin in this comparison, I'm like, oh, the S&P still has like 4 or 5 more days into next week. But if you look at the cash market, it's the cash market that drives the market, not the futures market. Futures market is the follower. I just like having a futures market here because it's a 24-hour market. So I get like, so when we do the show before market opens, I can have an idea of where the market's going to open. But this is not the MRI I'm supposed to be looking at. This is the MRI I'm supposed to be looking at. And it came today. So yeah, I think the market stopped. This is today, tomorrow, maybe tomorrow, but unlikely. I think it's topped.
Yeah, or at least not going to be trending significantly higher.
Right. Well, right. The NASDAQ still has its MRI coming tomorrow. And as you guys know, the day after tomorrow can still lead to a top. You can see it right here. I mean, yeah, we didn't keep going higher, but in general, this is a totally normal candle. This on the 16th of May. Totally normal candle. The MRI top comes in on a bullish candle that closes at the top of its range. No opportunity to short. You got an opportunity to short the next day, though, right here on the shooting star candle. The following day it went lower. Yes, it didn't stay that way. Yes, you got a green star candle. Yes, you can exit your short trade and flip it to a long trade on a green star. But the point is that I would never short a candle that doesn't have a wick. A bullish candle doesn't have a wick, but this right here, along with the S&Ps daily, Doji, everything's topping to me. Everything's topping.
So I have a pull up your DXY chart. I'm curious to get your opinion on that. It's actually not doing anything. It's just sideways. But I'm curious to.
Honestly, I think Europe is totally fucked. I think Europe is in serious trouble. And I mean, there's one European leader that seems to know what he's doing, and that's Viktor Orban. Other than that, they're all in trouble. And I think Europeans are very scared for the US election. Because if Trump gets elected, he's not exactly pro-Europe. Trump is very skeptical on Europe. And Europe's in serious trouble, and I don't understand how their currency is doing so well. I am completely baffled that the euro is not 90 whatever European equivalent to cents is to the US dollar. Now, let me see here. FX. Nope. FX. I am completely baffled why the Euro USD pair is not at an all-time low. I think a major crash is coming in the euro, like a straight down, like this arrow that I drew here. Think the same arrow is coming, like a straight crash right after the US election or around the US election. If it looks like Trump is winning, I think the Europeans are going to panic. I think they're going to panic because if the United States leaves the Russia-Ukraine conflict, Europe is done. Europe will not be able to hold the bag. The US will not continue to support Europe, and Europe is not going to be able to get its relations back with Russia for cheap energy. I just don't understand how the euro is surviving, and euro is 65% of that pair. So the euro is rising against the dollar is hanging in there, and probably because the Japanese currency is crashing against the dollar, whereas
Right.
US
That's
dollar
part of it.
Japan pair. That's like the next biggest thing in there. And then some the pound. I think the UK is in a slightly better position than the rest of the European Union. And you can see how the British pound is holding up okay. But I think the DXY is going to skyrocket because the euro is going to collapse. And I'm expecting the euro collapse when as the election comes near.
So a collapse of the euro isn't necessarily bullish for the US markets. It's not because it just makes it difficult for the indexes to trend strong while the dollar is strong. They both can go up at the same time and have done it many times. But a weaker dollar is going to be helpful for the market indexes in general.
That is true. It is if the dollar is strengthening, it's very hard for dollar-denominated assets to stay strong. And dollar-denominated assets is pretty much everything, right? Commodities, Bitcoin, even the stock market, because it's the U.S. stock market because it's denominated in dollars. However, if the euro starts to crash, the amount of money from the Europeans that would flow into the speculative markets, like the stock market, like Bitcoin, like gold, is going to overwhelm those markets, and they will rise. They will skyrocket with the dollar, in my opinion.
Yeah, it's very it's interesting. The DXY is just confused right now. I mean, if you look, it's basically been going sideways between 101 and 105, 106 since December of 2022. And so I get all kinds of mixed signals on it. Couple bearish, couple bullish, but it's really just sideways. And until like 101 is broken to the downside, or maybe 106, 107 is broken to the upside, it's going to be pretty unclear for a while. Now, from going back to Bitcoin, what I am anticipating and looking for, I've mentioned on a couple streams, is the eventual topping on monthly of DXY. And I don't see any sign of that right now, but this next top, we have two lower highs on monthly. And if we could confirm another lower high and get DXY turning around, that is going to be very bullish for Bitcoin. That is typically what is needed to send it into that final really strong phase in the bull run. And I think it's one thing that is also preventing Bitcoin from run. Oh, Tone, real quick. There's one thing I wanted to show on
Yeah, before you do that,
yeah.
It's very, very interesting. Look at the Dow Jones. It has not done anything since March. In fact, it's down since March. The high was made in May, but we're currently sitting lower than March. Look at the NASDAQ. Significant all-time high versus March, probably up like 10%. Yeah, 10%. Look at the S&P. Probably up like 7% since March.
Yes,
Huh.
I've noticed that.
Oh, I'm getting good at these estimates, man. And the Dow is a lagger. And this tells me, again, it convinces me that the top of the S&P is in and the NASDAQ is in. And it also, what I've been saying, remember, the Dow is what turned us around in October. It was the Dow that was the biggest mover from, I mean, we can go into March or we can go into the end of year, right? So 20% for the Dow since the lows in October. We're about the NASDAQ, the lows in October. A little more, but I believe it was a lagger when it started. And the Dow was definitely moving better than the S&P was. And
yeah,
I remember those discussions on Spaces. And I said, that's international capital. Again, I'm not taking credit for this. This is what I learned from Martin Armstrong over a decade ago, that international capital drives into the Dow. It's the domestic capital that drives the speculative NASDAQ and S&P somewhere in the middle. With, oh wow, the Russell is down as well. Russell is significantly down. This tells me that international capital is not flowing in. International is not flowing in, and domestic has also slowed down. So there are limits to how much more money is left to enter the S&P and the NASDAQ. I think we're topping. I think this is it. All right, do you want to take screen share one last time?
Just one last time. I'll show you something interesting that I've been tracking. So this is money supply 2. If I zoom out on here, this kind of shows us how insane 2020 was. We saw a 40% increase in the M2 money supply, which we can talk about later, but that's not what I'm focusing on. Right here is a little bit of what I would perceive as testing the waters of some QE to start to bring some liquidity back into the markets. I do think they're recognizing what you're recognizing. Hey, the markets are getting toppy, and they're going to let them top. I mean, the election is going to get a top in the S&P. I'm very confident in that, and it's probably going to get a little bit of a 10% correction, maybe bigger. But we've got inflation poking above 4%, and it's very, very difficult. Once it pushes above 4%, it's very difficult to push it back down. So I am anticipating that unemployment is going to creep up, and that allows this little blip in the money printing And eventually we are going to see some rate cuts outside of what we've mentioned about like maybe September, to get this liquidity going again. And so long term, seeing this after the elections are over and getting into 2025, I still think that the markets have more upside into 2025, and it could be powerful, especially if this trends anywhere near, trying to get back up here. But this is one of the longest periods in history since coming off the gold standard where they literally shut the printers down. Basically have not been doing anything significant since April of 2022. And here we
All
are.
right. Well, they couldn't keep the printers going. Inflation was running 7%.
Right, right. But this is interesting because, this was a little bit right here was a little bit of a tick up. And I just drew a little horizontal here as kind of a resistance point. And clearly they have decided to print above that. It's not really being reflected in the markets yet. In fact, I just recently saw something like even more money has poured into, 5% money markets. And which keeps me amazed that the stock market is as strong as it is. I still don't even know where that liquidity is coming from, except for a lot of it is residual from 2020, because all of this money that was printed in 2020 did not go, it went into markets. That's where it went. It went into assets, and those assets all went up and profits were taking. So there are so many trillions of dollars circulating because of what we saw in 2020, and that is what's helping the stock market right now. But I still think that there is going to be an incredibly strong move in 2025. I'm just not bearish, and who knows who's going to be the president. I still think the stock market is going up in 2025 regardless. But let's just see. So my prediction is this: as unemployment sticks above 4%, this is going to continue to rise. We might see an eventual 0.25% rate cut, and they'll start testing. And maybe by September, so we're talking about Bitcoin maybe getting rolling. If we get a little bit of easing in September into 2025, that also might help, and it will weaken the dollar a little bit. It'll push the dollar down. I'm just waiting for a strong monthly signal on DXY to have put in a top and really start turning around. And I've studied this really deeply. That's the final thing. One of the final things we look for to get Bitcoin. Like the table is set, the structure is set. The bottom is built. It's just we need money rolling into Bitcoin, and it's still not risk on. It's I think we need some quantitative easing before people are comfortable putting even more money into the ETFs and whatnot. So, but I also think there are trillions on the sidelines waiting to enter. And from there, I'm good to go.
All right. I think that's a good place to leave it.
Perfect.
Let you want to stop the screen share, or you know what? I'll take it one more time from you for one last screenshot. This is my ETF stats, and you can see how the last 2 weeks brought in 5,000 Bitcoin into the ETF last week. Last week it was 3,800. The week before it was 5,000, and Bitcoin still hasn't done much. And these are decent numbers. And then yesterday, the ETFs added 5,000 Bitcoin just yesterday. And today, the price is kind of flat or slightly up on the day. So they're going to add more today. So the ETFs are buying while the price is consolidating. This is a good sign because eventually there's not going to be enough liquidity. And these ETFs will try to buy 5,000 to 10,000 Bitcoin and no one is ready to sell. And then the price just shoots up.
Right. And I don't believe that people buying now are going to be shaken out if the price drops into 48K. I think that they'll be
Agreed.
more. Yeah, these
Agreed.
are probably long-term buy positions which is what I was saying earlier. Like this is the accumulation period. This is this is the time to try to build a position that can bring you into 2025. You just have to be kind of smart about how you manage things, and you just follow the big money. The big money is showing you what's happening, and as Germany sells and every other people sell, I've seen buys of billions of dollars, not just from the ETFs. Um, they're all accumulating, and I'm not going to go into this right now, but there is a potential accumulation pattern taking place in Bitcoin, with 56K being the spring. It's a little bit too soon to make that call, but I do see that as possible. I do see, or I'm sorry, 54K. I do see it's possible that we are in a clear accumulation pattern. That was the spring. We just need to jump the creek and trend up. So we'll see.
Yeah. So according to my numbers, only the month of April was net selling by the ETFs. The last 3 months, even though the price has cratered to new lows, monthly data right here is showing me that in May, there was a net purchase of 30,000 Bitcoin.
That's
And
June.
in June, a net purchase of 11,000 Bitcoin. So if we go back, May was this 30,000. This red candle last month, still an 11,000 inflow, and we were
Go
down big. And
go
so
back to
far
that
this month, yeah.
because you haven't broken down a week. It's actually 40,000. It looks like, well,
No, okay, no. These are the weekly stats,
oh god, okay,
and these are the monthly stats.
okay.
Maybe I should put like that.
There you go.
That could be easier to see.
Yeah,
All right. So the only month was the month of April. May was a big positive. This is where the price fell, but there were still net inflows. And so far this month, we're only a few days in, but we're already close to this number because it was 3,000, almost 4,000 last week, plus 5,000 yesterday. I mean, I do verify these numbers on my own, but I'll get the stats at the end of the week, and
yeah,
then I'm gonna start filling in July.
it's looking positive. So
And
I mean, we're about a third of the way through the month.
yeah, and by end of year, I'm expecting the ETFs to be holding over 1 million Bitcoin.
Wow. Right now they have 869,000.
Yeah,
Wow,
and
that's crazy.
since the beginning of the year, GBTC has sold 56% of its Bitcoin, 345,000.
Yeah, they could
They
have been the
now
most
have they now
powerful.
have they now have a lower average volume than Fidelity does, which is interesting. They have 50% more Bitcoin, but less volume.
Yeah,
That's a
I think
bad sign. They're gonna flip. I mean, once the volume significantly is higher in Fidelity, no one's gonna be trading grayscales anymore, and it's just gonna bleed Bitcoin.
Yeah, I believe that was an inside deal that was made. Grayscale could have been like one of the most powerful entities on the planet had they just decided to hold their Bitcoin. But there's just no way BlackRock was going to enter this game unless they had control. I just didn't see any other way. And it's very clear that they are holding the largest amount by a lot. They have 5 times more than Fidelity. Do they have it looks like just quick. It looks like they're holding more than all the others combined. That's correct, right? I lost your audio tone. You there? I can tell
My
you're there. It is.
microphone died.
Yeah. So they have.
No. They don't have more than the rest combined. If you exclude GBTC, they do, but no. The rest combined have right here. It's Bitcoin held by ETFs. Oh, that's them together. No, the rest combined have 562,000. They have
I see.
307.
Okay.
Eventually, they'll get there.
I was looking at the wrong. I was looking at the wrong column. Um. Yeah, that's
So
interesting. And now you don't have.
since inception, since this year, ETFs added 250,000 Bitcoin in aggregate, right? So GBTC sold, but in aggregate, 250,000 new Bitcoin was added to the ETFs.
Okay. Wow. Yeah, that's a great spreadsheet. Do you ever post that out on Twitter or no?
Yeah, it's public. I used to post the link. I'll throw it in the live chat.
Yeah, it's good. So they're
All right.
buying, they're accumulating.
Yeah.
Real quick before you go. So what is your strategy if you've exited based on Consensio? Um, you're not much of a knife catcher. You're not a dip
No.
buyer. You like to wait for strength. So
I
you're
mean,
pretty.
there's exceptions. There's exceptions. If we dip to 48,000 mid to late August, I'll buy that dip.
Yeah, okay. I would too. I definitely would. I bought the literal bottom. That MRI support right there. Um,
Here.
nope. Right, the very last drop.
This one?
Right there to the dollar.
Oh,
And
I
they were
didn't buy that. No.
they were they
Well,
were they were yeah, you were exiting, but I was buying some spot right there. That was a buy zone for me.
no, that wasn't for me. I'm waiting for another one of these.
Yeah.
Or my favorite, the one at 20K, this one. Where the hell is it? This one.
Yep.
Back in March last year.
Perfect.
No, there are times to catch a knife. This is not one of them for me.
Yeah, for me it's something I do outside of Consensio. It's more of a strategic dollar cost averaging that I do, and it definitely does entail catching some knives. But it's a much longer term plan. And that was very, 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 very low risk buy right there based on many, many metrics. But with the idea that I'm fully knowing that the price could go lower. So I kind of have a plan the same for you. But yeah, I would definitely dip my toes in some of that exit strategy in the upper 40Ks, even 50K, I think I would. But according to Tyler's strategy, he's not going back into Bitcoin until the price is back above 65,000, basically.
I'll get in earlier. I'll get in at 63, 63 and a half, but not 100%.
Yeah, yeah, got it. Makes sense. All right, Tone, awesome. I love getting your perspective and your insight in the stuff I'm looking at.
Yeah, likewise. Oh, and guys, I keep forgetting to mention, Unconfiscatable is literally just 2 months away. 2 months away in Las Vegas, Unconfiscatable. Come and join us. There's going to be an awesome time as usual. And the financial summit is still about 6 months away in the Maldives. That one's coming in March. Mark, we'll talk offline. Hopefully you can make both.
Go to Unconfiscatable. It's so much fun. It's a ball. We had a blast last time I went there.
All right. Thank you guys for watching, and see you all on